Hello everyone, welcome back to my channel. So this video marks the end of the week number 61 in this road to 100k realized return challenge, and this has been a week of ups and downs, but mostly downs, and as a result of that this was a particularly lean week. We managed to get only let's see, so this was, let's just take this 16 out of here because these were shares that were assigned, and yeah, we managed to collect only a little bit more than $783, and so nothing really remarkable given the pace at which we have been progressing through the challenge. But yeah, that's how things are going, and now at the moment the week has ended in a high note. Nonetheless, stocks recovered on Friday, yesterday, after being losing on the losing hand for 3 straight days, Tuesday, Wednesday, and Thursday, and mainly because of, as a result of some of the Fed speak that occurred on, especially on Tuesday. On Monday, things were pretty innocuous. This Fed speak was not that significant, but then on Tuesday, there was some additional concerns about deals related to AI and Nvidia and Oracle, because apparently some deals that were in the pipeline will not be taking place, and also because Fed Chairman Jerome Powell told, or basically stated during his speech, that stocks currently are fairly highly valued, and so this hint that the market is quite expensive at this point was also a contributor for stocks coming down over the next 3 days. So on over the next 3 following days, uh, Tuesday, Wednesday, and Thursday, even though this PMI was not so much of a factor, it still recorded an expansion, but in this case, as you can see, yeah, nothing really remarkable here. But then on Tuesday, things continue, even though jobless claims were below what was expected, which is a good sign, and actually the GDP for the second quarter went above the estimations. Now, of course, I imagine that part of this increase, especially given the previous quarter and also the expectations, is the high or significant investments in AI that have been taking place. But still, this is something that, yeah, it's a positive development, but still, it is something that apparently did not play much of a role in the market. The market still went down, and then the next big economic data development that would come on Friday was the PCE, the personal consumption, the PCE, so the PCE, personal consumption expenditures index, which is one of the most used, or one of the most reliable indicators for the Fed to dictate its own monetary policy. And as you can see here, basically came pretty much in line with the expectations, which still poses the question that even though it has risen according to what was expected, it's still a measure of inflation which is well above year on year. Of course, year on year is well above 2%, which is a target for the Fed. And so I believe that this may also play a role in the cautious role that the Fed will have to continue to make in order to make the decisions in terms of interest rates later down the road until the end of this year. Nonetheless, investors continue to factor in 2 more rate cuts until the end of the year. So yeah, this is something that we will have to monitor closely over the next few months. Even so, the market went up on Friday, despite the fact that US President Donald Trump still announced additional tariffs on pharmaceuticals and big trucks. So this is of course a negative development, but still it did not make the market falter. The market recovered after 3 days in the red. And so as things stand at the moment, this is where we are. We now have 1200 shares relative to the last video that we did. We still have the 1100 shares, and we also were assigned 100 more. And at this moment we have a short call position for 12 contracts on a 244 strike price, which was basically the acquisition cost of these shares. Now, to give a brief rundown of what transpired. So we sold our 11 calls, based on the 1100 shares that we had from the previous week, and we still sold a put on the 241 strike price, and these were the premiums that we still collected. This put expired worthless, and then, but this, as you can see here, this is of course the next day, and as you recall, I had to sell calls for 2 days because the price was quite low, was around 242 at the time, and so the premiums for the 244 were not for the 0 DT option with the strike price 244 were not good enough, so we had to wait. We had to sell a 2-day call. Now, for the next day, given that the market recovered somewhat, but still was not enough to sell these shares, we had to sell an additional put here for 244. Now, it might seem a bit strange that, all right, these calls, if these calls were still on, right, because that maturity hasn't arrived, and we were selling a 244 strike put, that means that the price must have been over 244 on Tuesday. And in fact, you're absolutely correct, because basically, in looking at the chart here, the 1-week chart here, you can see that over the Monday, the price went way over to 244, and so at some point it touched upon the 247 intraday, but at the end of the day the stock really made a U-turn and came all the way down to around 243.84, because it was 243.84 because this is the difference between the strike price 244 and these 16 cents, so 243.84 here. So after being in these calls being in the money for most of the day, and we were on track to sell them, and I was already kicking myself because with the price at 246, 247, that means that if we had gone a little bit higher on the strike price, we could have done a capital gain. But in the end, because of the U-turn, it ended up being the right decision because we maximized our premium here. But this is of course not expected. These puts were already almost worthless at some point in the day, but because of the U-turn, they became in the money right at the end, and so yeah, that's why we were assigned 100 more additional shares. So as you can see here, we had to buy 100 more shares. Now, the way things stand or stood at the time, things continued to go down on Friday, and keep in mind this was mostly because of the statements of Fed Chairman Jerome Powell. Stocks continue to come down on Friday, on Wednesday, and on Thursday still they didn't recover. But coming back here to our trades, so basically we were assigned this put. The calls, of course, they expire worthless. We had like a sort of a short straddle, but of course a bit of a diagonal straddle because the calls were much more than the puts, so we had to buy these 100 shares at 244, basically the same acquisition price as in the previous one, as the previous 1100 shares, and then we sell 0 DT calls the next day on Wednesday at 245. And at this point, because the market continued to go down, these calls became almost worthless at 1 cent very quite early in the day. But then I decided, all right, I have two options. I can either roll down to 244, or I can sell another 244 or another 245 call for the next day, expiring the next day. So I would bring forward some premium. However, I decided, all right, not there were not any specific developments going on Wednesday, and after the pull down, the significant pull down that took place on Tuesday, and because previously we already left some money on the table by making these sort of moves, like unwinding these positions and putting another ones, I decided, all right, let's keep this, because if the market makes a pullback, these calls might end up gaining some value back, and we may be able to sell at 245 if the stock makes a pullback, because keep in mind the stock went upwards to 246 and close to 247 on the previous day. However, just like in the previous occasions in which we brought forward some premium, at this time the market did not went the way I hoped for. The market continued to go down, and then by the time these calls were at 1 cent, and I decided, all right, the pullback is not coming, so this put will be expiring worthless anyway. At that point, the 244 call was already almost worthless as well, so there was no point in buying these back and selling again the 244. I think the premiums on those were already like 3 cents a share, so it was not really worth it. And that I also decided not to roll over to the next day, because the stock can come back the next day, meaning Thursday. And if we bring forward the premium now at a much lower stock price, I would be leaving a lot of premium on the table. So I decided, all right, let's just expire. Let's just these calls expire worthless and wait for the next day. Because again, you never know what's going to happen. But then on the next day, on the exact next day, Thursday, the move did not come, and what basically happened was that we did not make any trades on Thursday. And why is that? Because even though we tried to sell some calls on IWM on Thursday, you can see the gap here. There are no trades at September 25th. The thing was that we tried to sell the 244 calls, and we set a specific price. But for the one day, the calls were simply not worth it. They were offering 9 cents or 8 cents a share, so it was not really worth it. Because if you look at the price here, pulling back the 1 week chart, yeah, there is a gap. So the stock gapped on Thursday, and you see that the stock started the day at around 239. So the to sell 244 strike calls, it was basically there was almost no premium for the 0 DT options. So we decided to sell or try to sell 2-day options expiring Friday with a 244 strike price. And we set the price. We set the price at around 20 cents or 19 cents. But amazingly enough, even though the calls at this point here, at around here, when this pullback, when this slight recovery happened, and around this recovery as well, the option reached around 18 cents a share as a premium. I decided, all right, it touched once, it touched twice. Chances are we're going to be able to sell the calls at 19 or 20 cents. But the move never came, and by the time we reached this peak over here, even no, the calls never recover in terms of price, because as you can imagine, as the time went by, some theta, some time to maturity also disappeared, or theta disappeared from the option, and the stock never recovered, and so the premium never reached the price we wanted, and so we ended up the whole day without making any trade. So it was a lost opportunity, let's just say. We did not lose any money on the options, but still, it was a waste. But then on Friday, again the same issue, because keep in mind the stock on Thursday, they closed at basically the same level as it opened. So we decided, all right, let's just wait until Friday. But at Friday again, because the price was hovering around 239, 240, the 0 DT 244 call was not available at a reasonable premium. So once again we had to go for the 2-day option, the 2-day call, and we finally got 20 cents a piece. So we pocketed $240, of course excluding the commission. And because we already had some money left, we also sold a put on the XLF here. Of course, the premium was very low because this is a low volatility ETF, and we were already on Friday, so this was the same day, the expiration, a 0 DT option basically. And so yeah, we earned almost nothing after fees, but whatever. And keep in mind here that on Tuesday we also sold a put, because we already had the money available, a put on the ARKK, which was a bit against my will, because as I mentioned, this is a high volatility ETF, and selling this early in the week, a put, chances are you are going to be at least at some point during the week with a put in the money. And even though, keep in mind, we sold this put, and this put, if I'm not mistaken, yeah, it had just a probability of 85% of expiring worthless. And if we pull here the ARKK chart, you will be able to see here, this is the weekly chart, then right around the time at which we sold the put, the price was in the high 84s and at around 85. However, during the week, and as you can see here, because of the pull down that happened in the markets came down. The stock of this ETF really amplifies these moves, and in here you'll be able to see that the stock really went deep. The option was deep in the money because at some point the stock was selling by around 80 and a half, 81, and around somewhere around that, and it remained that way all the way until Friday. But on Friday, given the recovery that the markets did, yeah, the the ARKK staged a 2.3% gain, and then it pulled away from our strike price, and we ended up the puts ended up expiring worthless, as you can see here. So we pocket the premium, the 30-cent premium, so no more concerns about it. And yeah, this is how the week went. Now, with the money we have, because keep in mind we still have 13,000 euros in buying power, which were basically the release of the collateral from the XLF put and the ARKK put. This is not enough to sell more puts on IWM, and so we're probably going to do is sell again another XLF put, and instead of the ARKK, we probably are going to sell a put on TLT. Now TLT is the ETF that tracks the treasury, the treasuries, the US treasuries, usually the 20-year and plus. And this stock has the advantage of paying a dividend monthly. So even though it doesn't say here, there will be at some point, yeah, there's a next dividend date at October 1st here. And so given the fact that these are options that sell here, as you can see, also every 2 days, because here is the yeah, it's true, it's every 2 days. Here it's with the difference of 1 day, and then 1 day, and then 2 days. But usually I've already seen these option chains before. Usually there's a put, the options expire every 2 days. So next Monday is 29, is September 29th. So if we get assigned there, it is possible that we still get a put, and we may get some dividend, which is of course 33 cents plus 100, so it's $33. So yeah, it will be a nice bonus for us, but we'll see if we still have enough, if this buying power is enough for us to sell a put on TLT and another put on XLF. And of course we'll see what's going to happen to IWM when these shares expire at the end of the day on Monday. For the time being, yeah, this is all. Feel free to leave your comments in the comment section down below. One last thing that I need to say is that we are also going to pay some attention to the exchange rate, because exchange rates play a role in our portfolio, because keep in mind our base currency is the euro, but we are opening positions in dollars, and so the more value the US dollar gains against the euro, the better for us. And now it remains stable at 117. There was one time it was almost at 119, which is bad for us, so it's better than the exchange rate basically comes down. But yeah, this is it, and of course I'm also available on LinkedIn in case you want to ask me any questions, and of course feel free to like the video and subscribe to the channel, and we'll reconvene on Monday to see how the trades went, either on Monday evening or Tuesday in the morning, to talk about the trades in which we will open the week 62 in this challenge, and I'll see you there.